Hi, everyone. This is going to be fun for you guys participating to kind of see different views and how different analysts approach uh, looking at the markets and individual stocks. So I thought with that, first, let me introduce myself. I'm Leslie Juflis. Trading Live Online is my educational website for traders. I'm a CMT, chartered market technician, and I've been in the markets well over 20 years now. And I use specific pattern recognition, which if any symbols that you put up, I will point that out if I see it. And I also combine it with just classical technical analysis. I don't use very many indicators. I do use a couple, but it's sort of selective when I use them. So I thought, well, what we could start with today is let's just start with sort of a perspective of the indexes. Let's run through the Nasdaq, the S&P, and the Dow, because I think that if you can get a handle on the main indexes, then that helps you with your individual stock or ETF selection, and sometimes even other futures markets. Okay, so I'm going to start here with, let's start with the NASDAQ, see if I can pop that up. There we go. So this is a weekly chart of the NASDAQ. And this retracement is coming from the 2020 low up to the high made in late 2021. And then the decline started out of this sideways range in early 2022. So I think the important thing to do is if you pull up your own charts, this trend line here is telling us really when a significant move to the upside might be starting. We've got to be breaking some big downward sloping trend lines in order to really see the market even attempt back up to these levels, let alone new highs. So the weekly chart, we can see that the Nasdaq out of this fall here retraced to the 0.382 from March 2020 lows up to the late 2021 highs. And then from there, that created the second point of this trend line. So from there, you can take it and extend it across. So on my chart, this trend line has been extended down here since this time period, and I just keep it on and I'll continue to extend it if needed. So this zigzag thing that you see here, this is called ABCD buy pattern. That's where you have like a swing down, a retracement, and then there's another swing that's around equal. Sometimes it can be a little bit longer, which is what these little things are down here. But you can see once it reached there, when it got to the 0.50 retracement from that low to high, you can see that it got, a pretty good rally there. But however, that wasn't the lows for the market, came back clustered around there. And this rally that we saw a few weeks ago, this pulled a lot of people back into the market. But so far, that's just a bear market rally. And notice how it just came up and really hit that trend line. So this is a very simple technical analysis tool that you can use that can help you to hopefully stay on the right side of the market. Is when you have that perspective, again, of those main indexes, that's going to help you to decide, do you want to be in the market long? Do you want to be in the market short? Or do you want to just be out of the market? So last week, again, these are weekly bars. I'm going to kind of spread that out a little bit. So last week, the indexes made new lows below the lows that were made in the summer. Kind of ticked down below them, and so far we've seen a bit of a rally to the upside. Now, I'm not convinced. It doesn't mean that I'm saying with 100% certainty that we're going to see new lows, but I'm not 100% convinced that we're completely out of the woods. I think what we might see for a little bit is just some ranging action back and forth with some pretty large swings in both directions. And then we want to be really monitoring the lows on this chart. And if we take a look at like a momentum oscillator like the MACD, I just have the histogram on. I don't have the signal lines. I use mostly just the histogram for this, but you can see on the weekly chart how big the momentum is to the downside here. Now, interestingly, I also tend to use an RSI, and this, since the highs here, the RSI has been sort of fluttering, oscillating up and down, still not quite out of the woods as far as being out of the bearish zone with this. It would have to really come back up and exceed this high. Again, it does look okay right here. It held this low. If you notice, if you look at my horizontal cursor and you just look left with it, you can see that it did not exceed these lows or these lows. So this is something, if it does come back down, price does come down and exceed that low, I'm going to be watching that RSI to see if it is showing any type of divergence with that, or if it is turning and coming down lower with price. So that's something you can watch too. Okay, so that's the NASDAQ weekly. Let's take a look at I'm going to kind of go through a few of these. So now this is using the SPX, and you can look at the SPY. I think I have a SPY chart to look at as well, but we have a similar picture to the NASDAQ. Here, this is what's called a butterfly cell pattern. This is known as a reversal pattern. Does not always get this type of move to the downside, but it has the potential for very large reversal moves, and that's what we saw on this particular one. We also had a head and shoulder pattern, left shoulder, right shoulder, and then it actually came. First, I thought that might be a right shoulder, but when it bounced back up, this formed really another right shoulder and then dropped from there. So again, this trend line on the SPX, this is the trend line that we want to be keeping an eye on. Now, I'll point something else out with this as well, in case trying to duplicate this on your charts. A couple of things. This horizontal line here, just about where the price broke to the downside on this strong rally last summer. Notice how it came again right up to that trend line. Now this area right here, this was a 127 extension. If we take that swing, the length of that swing, and we measure it, just for example's sake, is if it's 10 points, you multiply it by 1.27, add it to the bottom, and that gives you a Fibonacci extension ratio. And this ratio is actually quite common in many markets, especially the S&P, and the 1.618 is as well. But this 0.707 was also from this high to this low. The retracement was 0.707. And we have the trend line. So this is a very strong resistance level right here. And the fact that this and this are intersecting make it even more strong. So if we were to see a break of the trend line, that's going to be an area of resistance to be watching. So you can see here where the NASDAQ got down to the 0.50 retracement from the March 2020 lows up to the highs. You can see the S&P still hasn't quite gotten there. And so what I'm looking at is possibly, if we see another low, the market was getting so oversold last week, and the sentiment was so incredibly bearish that it wasn't too surprising to see this type of snapback rally. But again, I still think we need some more evidence to say if this is like a double bottom type of formation. Of course, we can use these lows right here to be gauging be gauging that by. So you notice that I just put this retracement. We have this 127 to the upside. Now this low to high, if the price exceeds here, we've got the 0.50 retracement, low to high. The 127 is right there. If it's a stronger move to the downside, then the 0.618 retracement and the 1.618 extension, Fibonacci ratio extension, are coming in right in this area. I'm going to scale down to a little bit different time frame, and I'm going to show you that there's actually a buy pattern forming in here. So if it does exceed that, then I'm going to be watching that buy pattern, the formation and the structure of it. It's not uncommon if there's a butterfly pattern like at a high or a low, then it's not uncommon to see the opposite pattern at the lows when the market is ready to turn again. And if you guys have any symbols you want to put in while I'm talking, please do, and I'll sort of line them up. Okay, so now this is just using the Dow Jones Industrials. This is the YM, the futures contract. Snow. Okay, I'm going to write that down and we will get to that. So, similar with the Dow Jones, we have sort of a complex head and shoulder pattern here. That means that you're getting multiple shoulders. So shoulder, 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 we have the head, shoulder, shoulder, and then finally a break, retest back up. I think I had that on a daily, and that line didn't transfer over to this time frame. So let's draw this back in. There's a couple places that you can draw this trend line. This particular one is just using the absolute highs, but I like to also use them and go down and find either the open or the close of the bar that started the move, and then go through, find kind of the best spot to kind of go through those opens and closes. So you see, it gives it kind of two areas to watch on that. So let's check the retracement PXD. Got it? I wrote it down. PXD. And let's see with the retracements how this is. So you notice that of the markets that we've looked at, that the NASDAQ was the weakest as far as the retracements. Then the S&P and the Dow Jones Industrial has actually held up a little bit better than the other two indexes. So that kind of tells us, what was the weakest and what was the strongest. So the assets that you look at within the indexes that you tend to trade. So Snow, that NASDAQ stock. So it's going to be most likely highly correlated with the movements of the NASDAQ. So you want to be aware of that if you're looking for long trades, but the market is still declining. So we'll take a look at those things. So I just want to show you just a couple of other charts, and then we will get into some of these symbols. Let's take a look at, which one is this? Okay, I'll look at this one. So this is the SPY daily. So for those of you that trade ETFs and maybe trade the SPY or watch this, we can see kind of some things, lots of lines on here, but let me walk you through. So after the 2020 lows, after the market exceeded these highs here later in the year, the market started the uptrend, and you could outline that with an upward trending parallel channel. And you can see sometimes where it dipped below, came back up. The center line, if you notice, you can see how many times the price really kind of coiled around that. And this is pretty common when you're using these types of trend lines, because eventually see here how it coiled around here. Eventually the market is going to move away and definitively out of the larger channel. Here we could draw another trend line under here as well, but here was sort of a indication and breaking of this that might be the direction that it's going. And here is where the market completed that butterfly pattern. There's the ABCD, the two swings that I told you about. So we ABCD, this is a sell pattern, and it extended above this high, and that makes it a butterfly. And so on my website and my subscribers, we had been following this pattern in this channel, and we're looking for the completion areas of this pattern, and then confirmation of a break with this trend line break over here. So we can see that here's the ABCD. Now, I want to point out something about this ABCD. This is a buy pattern, but there's a couple of things. There's a gap right here. That's not usually a good sign. You can see that the market got just a little teeny tiny, sort of filled that gap and down to the extension. So that means that the length of this leg extended by the 1.27, the way I just showed you. So my feeling is, again, that we're going to be seeing some back and forth with this. And looking at the SPY on this chart, it just missed that 0.50. And my feeling is if this low breaks, we're going to see the price extend down to the 1618 or the 618. So you can tie that into, again, looking at the other indexes to see if they're following this. Or let's say the NASDAQ is not breaking the lows, and you're going to have index divergences, and that's going to be important to note, especially if you're looking for long positions. Eventually we'll get a sustainable rally, but for now, I think we can use maybe some retracements to the upside. So yesterday, it got right to the 382. If we come up higher, the 0.50 is going to be the next level, and that's coming into where this previous level of support was, and it's now resistance. And same with that 618. So going to be monitoring the indexes, and then you can see the MACD had the momentum lows as well. So the question again is, with these momentum lows, is the market, there's a little bit of a bullish divergence there. Is the market at a double bottom, or is this just a corrective move back to the upside after seeing these pretty strong momentum lows? And so that remains to be seen. But if you put in specific levels to watch, your support resistance areas, then that's going to help you to navigate and answer that question. You don't necessarily need to figure it out right now. I think you need to be looking for some more evidence. So now I want to show you one last chart, and we'll get to some of the symbols that you guys would like to see. So I want to show you also, let me see if I can squish this up a little bit. So I'm on an intraday chart now of the S&P, and I want to show you the price behavior that's been happening. And you can, the charts that you like to follow, you might be able to go in and see the same type of price behavior. Let me see if I can kind of arrange this so we can get good visibility. I'd like to lift this up farther and then kind of spread it out. That's what I'm trying to do. So notice how the price behavior and learning, learning price behavior can help you to set up what the next expectation is. That doesn't mean that's what it's going to do. But if you can kind of see what the expectation is, then you can gauge what happens against that. And if the expectation doesn't play out, that gives you a lot of information. So here is an example. This area here, that's where that rally this summer ended. And this is a resistance line that I had drawn from way back and extended it. And so I could see in real time, see it come up to my line. And here the market formed a triangle pattern. So here's here we can form some type of an expectation. The expectation is the price is eventually going to break out of this type of coiling pattern. It's going to break to the upside. If it does, it's got this still to contend to, but if it breaks above there, then we're probably going to be having quite a continuation of the rally. If it breaks to the downside, then we've hit some strong resistance and we're likely to get a stronger move back down to the downside, which in this case is what happened. So the market has been doing this process of sort of going into these ranges, and then these are kind of contracting phases, which is really all the market does: contraction, expansion. That's it. So this makes it pretty simple: up, down, sideways. That's it. And so here's a coiling sideways range. Here's the center line again. Notice how the market, oops, I guess if I could stop moving these charts around so much that you can't see what I'm talking about. So here's the center line. Notice how the price came up, down, held it, up, down, test, test up, test down, false move to the downside, back up right to that center line, and then falls out of that. So this has been the pattern. It's been making these large moves down or up, and then doing some type of a consolidation phase, and then continuing the expansion in one direction or the other. So here, by marking this in, extending it out, this is the ABCD sell pattern as a retest up to where the market broke out of there, which made it a really nice sell setup. These things are going to occur on the stock charts, ETFs that you watch, any market that you watch. So once again, it comes up, it tests, it falls down, it creates another range, falls down, another range, falls down, another range. This one here, see, this one was extended, even kind of created a range within a larger range. This is where it kind of fell out of there. And then now it came back up above that range, but this line is telling us there's some resistance there as well. So anyway, that's kind of the process in a nutshell that I use. So, and where we are with the indexes. But you can see intraday, there's a lot of really nice swings to trade intraday. So let's take a look first at SNO. I think I'm going to have to put it, I don't think I have it in this list. Nope. Nope. So let me quickly put that in. And we'll take a look at that. Oh, hang on, I need to do one more quick step to get it active, because I always have so many symbols on here. I think I could clean those out every once in a while. Okay, so let's kind of go through the same process with SNO and see what we can see. And let's back up a little bit and get a little bit wider perspective. Sometimes I know traders kind of tend to get maybe too close of a view without going out a couple time frames and seeing what's happening. So Sergio, was the symbol SNOW, was this a IPO back in 2020? Okay, great. Yeah, because I thought either something's wrong with my data or it's it's an IPO. Can I explain point? I can't explain them in a nutshell, but they're fantastic. I love point and figure charts, but they are going to require, if you take an interest into the simple things that I tell you about them today, then maybe you might want to study them, because they will take some time to study. Okay, so let's kind of talk about, first of all, we'll talk about this symbol. So we had an IPO here, and I'm on the I'm looking on a weekly chart. So we have all of the price history here. Still not a lot of price history, but it's enough. it's enough to work with. So the IPO came out, and as so often does, especially at the end of 2020, there was the sentiment was at extreme greed at the end of 2020. So we saw a big run up in the IPO, and then, as often happens, then they sort of collapsed back down. But it did offer, based on the patterns that I use, the ABCD type of pattern, didn't quite get there, but it held these lows here. So these swings were not quite equal to get to that entry. But then another rally and a test of the highs. So I want to show you something, because I think this is a 0.886 Fibonacci retracement. Let's see if I came close. Yep. So 0.886, this is what I call the last chance fib retracement. And a lot of traders look at, what I have on here up to the 786 and then to the 1.0. But this 886, I call it last chance, because this is an area where a lot of traders think if it gets to the 786, if that's what they're watching, then it's going to continue up. But very often that 886 will catch it. And you can see, the market turned from there. This was also really retesting this area of where these high close was, and then the open almost in the same area, testing that price level, and then just really slammed it back down. So when the 886, generally when the market starts to get a close above that 886, then most frequently it'll test at least the 1.0, and very likely it will exceed the 1.0, and then that 127 will be the next level to watch. So here, the market goes into this big decline. I start to see lots of buy patterns forming here. At the 1.0, you can see it found some support there. It got a retracement back up. Not a bad, trade on that. Looks like about 60-ish, 166, 80 points. There's almost 80 points on that rally. And you can use fib levels for like retracements to help with managing. That went up to the 0.50. Just let me remove a couple things on here. Okay, so now it's interesting, because on the weekly chart, SNOW has held above these lows. So you notice the indexes that we just looked at, they all have come below those lows. So right now, this symbol SNOW is showing that it's stronger than the overall market. And so that is, that's a bullish condition for this. Now, one thing is, I notice here that it looks like there's an ABCD buy pattern right here. I'm going to scale down to a daily chart to look at this. There's room on the upside for this to reach at least to the 382 and possibly up to the 0.50 as well. These lows here have to be absolute, the absolute lows for risk. I would pick a spot much sooner than that, because that's an awful lot of risk in there. But IPOs, a lot of times when they do this type of thing, I mean, you can see there's swings in here to trade, but a good place sometimes to look at IPOs is not necessarily when they first come out, because they can have a lot of volatility, but when they get up to and exceed the initial high from the IPO, that can be a very good place to buy it, even though you're, in this particular case, you have quite a wide price span on that. But this is telling you, when that happens, that there's enough interest, and probably institutional interest in it at that point, to be able to push it back up. So in this case, I would watch that 886. And you can see that trend line is sort of intersecting there. And if it starts to get closes above there, that might be a very good buy point. But before it gets there, obviously has some work to do. Let's look at the daily chart here. So I'm going to look at a couple of things. The first thing I'm going to look at is I'm going to look at the low to high retracement. So that retracement got to the 0.50. And remember, the indexes were busy making new lows, and Snow was able to hold that 0.50, makes a bullish candle pattern gap above. And it also made this ABCD buy pattern. I do on my website, I don't mean to sell you guys anything today because I think this is just fun to go through live charts. But if you like this kind of stuff, just there's an introduction to the pattern recognition. It's very reasonably priced, and it will give you several hours of how to learn the structure of these patterns and a lot of other, lots of other tips, technical analysis tips with it. So here's a ABCD. This is actually called a Gartley buy pattern because this ABCD is contained within this previous swing. So you've got a gap to the upside. It's actually looking fairly trading live online. And you can find my contact there too if you have any questions for me on this stuff. But here you can see that the market turned from the 0.50, so that 163 area. This is a little bit dicey in here for a buy because you're sort of in the middle of a retracement of this leg. So there's a couple of ways that you might be able to deal with that. One is trend line. The other is if this does any type of retest back down, you want to see it hold this gap. And then the low of this bar would really be, for monitoring this section, would be, an area to consider the stop loss. But I think you can see on this chart how you're right in the middle of that leg now. So if a trader had entered this at this D completion point of this buy pattern, they would likely be taking some profits here. So you're entering at a place where you might be taking profits. So I hope that makes sense. So here's a couple. So there's, a number of things to look at. We've got a longer term view of that upper trend line. We're looking at the correlation. Without doing a correlation study, we can see that this is not really, this is not going to be a high correlation to the NASDAQ, because we can clearly see just with our eyes, we can do so much with just looking at charts. Look, I don't even have an indicator on here. We can clearly see that this held when the indexes were falling. So I would monitor this, and if the indexes do make new lows, I would be keeping a close eye on this to see if it's able to hold above these lows. Okay. Okay, so yeah, you're welcome, Sergio. I hope that helps. So we have another one. I'm just going to close this. We can come back if we need to. And the other one was, let me scroll up. PXT. Do you think I have enough charts on here? I have more. Okay, let's put that on here too. Let me add that symbol in. I look at different, I have a number actually different chart sets that I use. This particular set I use because it has the Fibonacci tools and the pattern tools that I use, and it's I think the best software for those, even though you don't have to have it to do those. I started out with just using a simple line tool. That's all I did was draw these patterns in using a line tool, which I think was really good practice because it really trains your eyes to see these. Okay. Oh, wow. Okie dokie. Let me refresh. I'm just going to refresh it to make sure I've got the data, since this is a new symbol for me. Oh, interesting. Okay, interesting. All right, first of all, let's go out. Let's take a little bit longer view. Let's go to the weekly chart. Notice how, look at how we automatically get so much more information. Was this an IPO back in 2014? On our PXD, excuse me. Make sure I have the right symbol in there. Well, it looks like it is, and either I'm not getting, I'll try and refresh one more time to make sure. Do the maximum. Nope, just needed to be refreshed. Okay, wow, okay. Lots of volatility. This has been a very volatile stock. It went into the classic sort of a basing type of a pattern. Here's the range, upside breakout, had to fool everybody, come back down 2009, that makes sense, and then takes off from there. ABCD Gartley buy pattern, ABCD sell pattern, that's actually a butterfly sell pattern, does a correction there off to the races, and then lots of volatility the last several years, but it's been able to come up and make new highs. So here's an example. I'm going to scale back down to a lower time frame, but we were just using snow, and I was telling you about the trend line. But look at how beautifully that would have worked on this. This is actually, let me draw this in. You had a big ABCD buy pattern down here. Notice how this gap here, how we gapped right through, because remember this leg can extend further than this leg. So this gap is a warning sign that there's still selling pressure there, but it gets down to that 127, and we could probably, if we went in, line that up with a few other things, price action back there, then takes off A, B, C, D buy pattern, retest that level there, takes off, consolidation, and then here's a little tip. If you use trend lines and things, notice how these swings were getting pretty large to the downside, right? Then it starts taking off to the upside. We start to see a longer leg to the upside. And then we're starting to see smaller swings to the downside. So actually this length of swing here, see if I get that right. That's pretty close. It's almost the same as this length, and then almost the same as this length. So you're getting these contracting swings rather than these big down swings. So, that just logically tells you that more buyers are coming in, but you do, because of this trend line, you have this to contend with. But when this was actually A, B, C, D buy pattern right here. But when you see big resistance, like notice here, trend line here, this move down, then we could extend the trend line down. At this test of this price level, then you get this big resistance. Notice how it just hits that and then immediately turns and falls down. Well, when it comes up to it again, it has a different price behavior. And this price behavior is opposite of what was happening here. It's holding here. And so then when it comes up, it does a breakout. You can always try an ABCD buy pattern. That's going to be a little bit lower risk. This might give you a little bit more confirmation, but you're giving up kind of trade location for that. And then it gets a breakout to the upside. So this trend line right here now, this really, you can come back down again and retest it, maybe even poke through a little bit, but you don't want to see the price come all the way back down in here at this point. So right now, you got here, you got the test, another move to the upside. You might be able to, it looks bullish, obviously, because look how much stronger it is than the other indexes, which are they were like way down here. And this one is holding up really nicely. So this, you might be able to use a trend line here if you're looking for an entry. If you're already long with it, then consider, risk just below this trend line. Give it a little bit of room to wiggle, but not too much. So does that help with PXD? Okay. All right. So point and figure. Let's look at a couple point and figure charts. And they're really great. They started out way back in the like late 1800s, early 1900s. And I believe they, we're back up to 3800. I believe that the traders at the time would kind of use their cigarette packages to sort of mark that the price was up or the price was down, and they would do it with X's and O's. I'm going to actually go to another set of charts because, like I said, you never really have too many charts. So the point and figure charts can be set even though they are not time-based. And this is one reason why I like to look at them. You can set them up on different time frames. You can set them up on a daily time frame, a weekly, a monthly, whatever, even use this one's, I have this set up on a 60-minute. But the X's, the green X's to the upside, have nothing to do with the time frame. They nothing to do. These are formed by the movement to the upside. So they work on box size, reversals. They're great for identifying support and resistance. I can even find A, B, C, D patterns on these. So basically the green X's, these are up columns, okay? And the red O's are down columns, all right? So I think I have this set on, let me check and let me see real quick. It's been on here forever. So the box size is 3 and the reversal is 1. And so for the box size, to get one of the greens, the price needs to move at least 3 boxes in order to mark that in, okay? It's a little, that's what I'm saying, it's a little complicated, but once you study it and get it, you can just really watch the charts instead of trying to figure out all that stuff. And so then you need, for a reversal, you need to have, like, see how we have here, have this long column to the upside, and then we have 3, 1, 2, 3 red O's to the downside. So that's a move to the downside. And now that doesn't necessarily mean that the market is going to reverse, especially after you have a big column to the upside. It might just be a little consolidation. However, this long series of the red O's to the downside, and especially if they exceed the halfway point of the previous column, which this did, then that can signal a reversal back to the other side. So you can see, just running through, we'll just run through this chart. I'll just get some more data on here so we can kind of see. So let's see what happened up here back in September, where early September, where there was the rally to the upside. So right down here, I'll start in this section right here. So you have these down columns here. Now, all of a sudden you have this up column, and it's more than that 50% level, right? You also have higher lows coming in here. And then you have this column. This column from the downtrend, this changes the whole look of that downtrend. And so this is a reversal column here. You can also use trend lines on point and figure charts. Let's see if I can. So like, if you can see, you kind of, let's say that you're getting into a big support area that you've already identified in advance, and you see a point and figure chart come down and then do this, and you can suspect it's starting to reverse, then you might be able to use a trend line. And there's some rules with point point and figure about using trend lines. There actually are different rules, so you have to kind of look at it. Jeremy Duplessis, Duplessis. He's got an excellent book on point and figure. So I think if you really want to study it, I would suggest his book. But so here we can see this column is changing the look of that downtrend. And so now we start to see just little sort of consolidations in here. So in point and figure, there's different patterns in point and figure. This particular one is I think that's a triple top pattern. And so once it breaks this pattern, that would be a buy signal. And then stops can be placed like below like this column as an example. Now, the thing is that the way that this is constructed, and you need the box sizes are 1 on this, so that's 3 points. You can set them at different things, but for me on this particular chart, I like it set this way. So sometimes the price can trade like maybe below here further than what it looks like on here because of the construction. And so if you're actually trading off of them, you have to be very aware of that. And I kind of like to use other pattern recognition because of that. It can kind of be something difficult to deal with point and figure. But now it gives us a clear area to look at for, support area from these lows to these highs, these lows down here as well. So once this breakout occurs, and then you have the down column, right here is where this is called activated. Let me see if I can show you where that is, right here. So in point and figure, you have this up column, but now you need one more down column without exceeding this to come down, test, and then once it gets above there, now it's activated. So here you can see the trend to the upside, and you can see these little continuation type patterns with it. You can see that all the way up. But look what happens here. Yeah, whoops. For that uptrend to really be continuing, you probably don't want to see something like that. Now, the other thing with point and figure is that you can calculate price targets with it. Don't think we have a ton of time to go into that, but you can basically, like this column is 20, this is a column of 25 up here. There's different ways to calculate it. They have what's called a horizontal method where you kind of count horizontally and you take that number, you multiply it by different things. This would be like, let's just say there's 25 across, or we're using the vertical method. That would be like 75. And so we would add that to the bottom, project it up, and we can get price targets from it. So point and figure is very good for that as well. And we can see how clear some of these, remember I told you the process that the market's always in. It's always is up or down, and it goes into the contraction phases and then goes to the expansion phase. So point and figure makes it very simple for me to see these types of consolidation areas without all that extra noise that's on a regular bar chart that's created by time. So these have an element of sort of this quietness to them that I find a large benefit in technical analysis. So you can use these, you can see the break below this trend line, a retest up. But again, this market, maybe it went actually further this way, or it went further this way that we're not seeing with the close of that bar. It's just the nature. So, okay, is that yeah, enough, Adrian? It's like, that's enough, too much information. But you can see as we kind of follow the price down, you can see, we can just put those levels in, see the expansion, again, contraction, Here's a little pattern. This is a butterfly. We have an A, B, C, D pattern here. It's a butterfly because the A, B, C, D extends beyond this low right here. And right now we can see on here on this point and figure from today, right now we can see that this column, we had a correction from the highs yesterday, corrected down. We can see the correction looks, you know, something too wrong with that. Oops, somebody popped up on my screen. Harry Boxer popped up. But you can see that even though it came down a little bit below that 0.50, we don't have a continuation below there and the markets turn back up. So that gives us an excellent place of support to monitor the market, because now if it comes back and breaks that support, the market is most likely going to be lower. If it breaks these highs up here, probably going to at least get up and test around these lows, the halfway point of this column. Okay, so do I have any other symbols anybody would like me to look at today, or anything else that I can kind of explain? Here's and now we can see that on a price chart, how that looks, the reversal back up today. Here's the highs from yesterday. It's just getting back into yesterday's close. SMH. Okay, let me pull that up. SMH, FGX. Okay, let me write these down. We'll take a quick look. I think I've only got about four minutes or so left. So we'll go through these kind of quickly. But you have the idea, I hope, from what I showed you before. If you want to go out, take a take a look at a larger time frame so you can get a little bit of perspective. I think I've got FDX on here. No, we already took it off. I'll put them all on at one time. And CMI. I need to go make sure that I get the real time on these. So let's just put them in real quick. SMH. Used to have FDX on there. Used to follow that quite a bit. And CMI. Okay. We'll start with the first one that came up. Okay, you can see right off the bat, even without going out to another time frame, I can see SMH was following the index down. So we know that this is pretty correlated with the, this is a Dow stock with the Dow Jones Industrial APM. We'll fit that in. So these are the lows to watch on here. You've got a nice gap to the upside. The market continues to rally to the upside. Remember, we've got a lot of work to do. This really followed the pattern of the NASDAQ. Look at this up here. Remember what I showed you on the NASDAQ earlier? It had that sideways pattern, then dropped. So this is following the index, of retest up there. So let's draw in. Technically, we should be coming down like this. Okay, that's interesting. So it broke. It had a little fakey move to the upside here, and then followed the indexes back down. I'm going to put on. Let's just put on. I think I'm going to pick one. I'm just going to put relative strength on. That's the only one I want to look at. Now, it's got the RSI, the relative strength really has to get going to the upside. So this may get, maybe a retracement right now to the upside. If I have to look at one indicator, it's usually going to be RSI to determine the strength. But because the RSI came down here, it looks like a little bit lower than this previous one, even equal to it. Being down at 28.5 is pretty low level. So it's not showing that there's a ton of strength in this yet. But if this is able to get a strong rally going, let's do a second trend line and break these trend lines in your RSI is really showing some strength. You might want to use some other momentum tool as well. But for right now, these, if you're looking long, like short term, then I would use these absolute lows here. You've got a gap here. If the market comes down and tests this, it should not be breaking through that. Okay, hope that helps. FDX is next. I don't want to run. Oh, we only have about like a minute. Ooh. Are you looking long, short, or you just, yeah, the chart's real time. Let's give this a little refresh here. That's ugly. We can only call that an ugly gap. That's all we can say. But look here is that on Federal Express, I don't know if they had some news or not to them, but here's the area of resistance. Here's your gap area right here. This has a lot of work to do in order to really turn bullish again. For now, it's bearish unless it got above this trend line and up strongly above this gap. It's probably just going to be in a bearish mode. Okay.